Alright, so hello guys, glad to have you on board again. Today we're going to do this one real quick because there's absolutely nothing new to actually talk about when it comes to all the markets we generally cover in those reviews. So just to start off with the S&P 500, same old story here. If you're a flow trader, you know that we have terminated the third and final flow and we need to wait for two consecutive bearish corrective flows. And for now on, we have rejected any attempt to create one, but bear that one in mind, it's going to play out. It's just inevitable. So there's always the kind of bullish trend, whatever narrative stuff. Don't fall in line for this. Just understand that the flow sequence has terminated for a long time. It's overextended, but that's all there is. Be patient, follow the structure. Don't try to question the narratives. Now, when it comes to the range trading, which we've assessed that we clearly have a trend movement in the daily charts, and therefore, as we have reversed context, there is a third range boundary opportunity to be traded. So it was in this area, and looking at the nature now, we probably could have traded it. I did, and the truth is now the stop loss is much higher than the current prices, which means I'm in the kind of risk area. I taken a trade, waiting either for validation or invalidation, and as none of them has happened for now, I need to remain patient, and so would you if you are in a similar situation. So that's all there is to know regarding S&P 500. First flow is going to come, whether now or later, doesn't really matter. You shouldn't be bullish anymore. When it comes to range trading, we had a bearish trading opportunity with signals, and I think it was worth trading. What's the outcome of it is going to be, God knows, and we're going to have to let it play out. And until then, uncertainty may dominate, but impatience as well, and you're really going to need to flush these two away. As you're in a range context, you will never control anything, neither timing nor the amplitudes of movement. So uncertainty on the actual triggers and the volatility is none of your concern. Okay, nothing new in here as well regarding commodities, so we're quickly going to roll over this. Remember, we're in a weekly chart reference in here, which means we're going to take regular updates based mostly on monthly or quarterly updates. We still review them each and every week, but don't expect any updates every week. Regarding cryptocurrencies, we're still trading right in the middle of the range. Remember that if you were assessing that range in the 4-hour chart, it would have these boundaries. So we would be right in the middle of the dumb zone, exactly the area in which you want to do absolutely nothing. So bear that one in mind. You can trade that range in here. Remember that in here the context hasn't reversed. Look at the blue color. So you still can trade it in the daily chart. It's still the same old 4-hour, very long and painful range which we've been in so far. And remember that now the number of range boundary is incredibly significant. There's just so many range boundaries. But once again, if you were just blindly and stupidly trading with the dumb strategy, you would have made some nice gains and saved yourself quite a hassle trying to figure out what the next move is by trading short-term stuff or whatever triangle breakout I saw all over the place in social medias. So same thing exactly, despite slightly different structure for Ethereum, but we'll see all of it. Atom is much more interesting to me because it offers an interesting kind of context earlier this morning in the fact that we're waiting for a potential first flow to trigger here. Remember, you must not try to trade it. It's just that if this asset is building a long-term bottom here, which we have all evidence that it is very likely, then we should have the first 4-hour flow to emerge out of this area. And the fact that we're attempting to break down is a kind of an interesting thing. That means, well, if and only if this level is held by the market, I think after a somewhat of a recovery, breaking the previous high points to me would be the sign that we are going to cross over the moving average. So it's most interesting. It's not a buying opportunity, don't get me wrong. It's just if and only if Atom shows bearish exhaustion, meaning that all the bears' attacks are now vain and being recovered very quickly by the bulls who managed to break the previous resistances afterwards. I think that's going to be a sign to me that this first flow is going to pull itself out till its end, which means we're going to wait until the bullish context crosses above the flat or rising moving average. From now on, neither of these two are actually existing, so it's just speculation. And remember, don't fucking buy out of just this. It's just, that's the best I could roll out for this week out of what we have already been talking about the week before. So that being said, I'm going to leave you guys with that. I said it would be quick, but there's really not so much to talk about. So we'll see if we have more to discuss next week. Bye-bye.